Nebius became one of the most popular AI stocks. It's a tiny company that's building massive data center infrastructure to power the AI boom, and it's already landed massive deals with Microsoft and Meta. In this video, we're going to do a deep dive into the fundamentals, the technicals, and whether today could be a massive buying opportunity for the long-term investor. So without further ado, let's dive right in. What kind of company is Nebius? Nebius is an AI infrastructure company that rents out power through their cloud, and they're essentially building massive data centers, supercomputers, and all this power they put in the cloud and they rent out to other companies who need this for their AI businesses. And they have massive customers like Microsoft and Meta. So this company is based in Amsterdam and listed on the Nasdaq, but it's operating worldwide, and they have all these hubs in different places around the whole world. And these are these massive data centers that power this whole AI infrastructure. So why do they call it Nebius? Well, here they explain combining nebula, which means cloud, with a reference to the infinite loop of Mobius strip. Nebius embodies our belief in the limitless possibilities created by our AI cloud. We're now looking on TradingView at the charts of Nebius, and we can see it's now trading at $86.71. We're now on daily candles. And we can also see that the 50 EMA is above the 200 EMA, and the trend seems to be bullish. And right now, if we zoom in, we can see that that's forming now a bullish candle. The day hasn't closed yet, but it's looking bullish so far, and it seems that it made a double bottom. And the stock is now up year to date over 200%. So the technicals look really good right now for Nebius. So right now we are in the middle of the AI boom. And what is the AI boom? So an AI boom is a period of rapid growth in the field of artificial intelligence. There's an increasing in demand, an exponential demand in AI right now, and many companies are trying to profit from it. It's kind of like a gold rush. And here we can see the number of Google searches for the term AI accelerated in 2022. And we see after this year, there's so much demand and it goes just straight up, super exponential. And Nebius is well positioned to catch this massive explosive trend. So it's an interesting company operating in the AI industry, and it's on a technical uptrend. But how are the fundamentals? Here on Guru Focus, we can have a quick overview. We can see the financial strength is a 5 out of 10. So they do have a lot of debt levels, which is a little bit of a concern, and they're also not really profitable. And if we scroll down, so if we look at the cash to debt levels, we can see that the cash is now much higher than the debt, which is good. And if we look here at the revenue, we can see here before it went up, and then it went down because it changed the company name. And now they have like this new business model, so it kind of started all over. And the revenue increases a little bit, and sometimes they're profitable, sometimes not. So let's look at the latest quarters. So we're now looking at the income statement on TradingView of Nebius. And we can see here the last few quarters were extremely positive of the revenue. So it grew by 100%, then it grew by 400%, by 700%, by 400%. So the growth in revenue went exponential, which is great. If we look at the profits, the net income, we can see that sometimes they were negative and sometimes they were profitable. So they're not too profitable yet, but the revenue shows that this company is well positioned in the AI boom. In order to know whether Nebius is cheap or expensive, we're going to use the price to sales ratio. And the price to sales ratio is essentially price divided by sales, so the market cap divided by its revenue. And this tells how much investors pay per dollar of sales. So here we can see Nebius versus the competitors. And you can see that Nebius has a approximate price to sales ratio of 50 to 66. So very high multiple, reflecting hype, high growth expectations, and low current revenue base, which basically means that it's pretty expensive compared to the competition to like CoreWeave and Amazon. It is on the expensive side at the moment. Also, if we look here at alpha spread, they did a intrinsic value with a discounted cash flow model and a relative value, and they took the average. And they came to the conclusion that it's extremely overvalued right now. So this website also confirms that. So thus Nebius has a strong economic moat. An economic moat refers to the competitive advantage a company has against their competition. And according to Guru Focus, it gave it a 4 out of 10, which means that it has a narrow moat. and a narrow moat is generally more risky. So we're back on the charts on TradingView, and we can see that Nebius is a strong technical uptrend, and that's one of the great things. Like, it's a good technical, and now it's like making a bullish pin bar, it seems to be. And it's also in the AI boom industry, and it's positioned pretty well. And what they're doing is there's a lot of demand for that. Of course, there's some competition, and their moat isn't the strongest, but they are in the right industry. And that makes this company, to me, a very interesting company. But I think based on the fact that they're not really profitable and that the price to sales ratio is extremely high compared to the competitors, I think that this company is a little bit overvalued. And that's why I'm not really too interested yet in this company. But if it falls more, then it can be more interesting again. But I think it could be a high potential stock, but I will wait patiently, do more research in the company, and then once it gets more cheap, then I might buy a position. I hope you learned something today. Always do your own research, always do your own due diligence. And if you like this kind of content, feel free to like and subscribe, and I'll see you in the next video.